traders, Todd here. Welcome to the free video update. This is going to be Tuesday night, the 23rd. This will be for Wednesday, the 24th. Remember, we have the Wednesday live stream, Elliott Wave Wednesday live stream, 8:45 on YouTube, youtube.com/Todd Gordon. Should be right here below me. Special guest is John Nigerian, my friend and colleague at CNBC. So looking forward to that interview. So we'll talk about that. Also, we had just back from the Chicago Traders Expo, which is great. I got to keynote and almost missed it with all the weather over the middle part of the country. We made it. They kind of shifted times around. Had a good time doing that. I'll show you some kind of pictures. In fact, we can do that super quick, and then we'll dive into some content here. So where is it? There we go. Pretty good times there up on stage. Nice, obviously in Tradertown, USA there in Chicago. Pretty good. And then got to have good conversations with John. A lot of traders. Met a couple good customers. It's always awesome to put a face to the name out there in Chicago and any Traders Expo. So, guys, let's dive in here. The market I want to focus on here. I want to talk about the NASDAQ, and I want to talk about bonds and kind of a way you might be able to trade them. Obviously, earnings season is here. Reports have been fairly solid so far. I like the response that we're seeing specifically tonight. Snapchat reported looked good. Coke was today, looked good. A few others that were giving us a good response post earnings. There was a report that the DOJ wants to go back and investigate big tech again. So those guys sold off after hours, but we'll see. Facebook is reporting tomorrow. With the NASDAQ, though, let's get into the Elliott Wave just a little bit and kind of set the tone. I think we are in a larger third wave that dates back to June of 2019, and the third wave is traditionally where those big gains are made. So within wave 3, I can count 1, 2, 3, and possibly a triangle 4 here, which means we have one more push up to complete 5 of 3. And then what does that mean? Well, that completes a higher third, which means we're going to have a fourth wave correction, which typically goes back and revisits the area of the prior fourth. So it makes sense that we move up and then back down. And one of the option strategies that I like to trade a lot with that kind of situation is I want to be directional for a move up maybe to 81, 8,200 in the NASDAQ. And then if wave 5 of 3 top does unfold and we begin to back off in wave 4, I want my option position to be able to withstand that selling. And the way you could do that is have some positive delta, but also have some positive theta, sort of a more range-bound strategy. So the way you can do this is you can do a butterfly. Now, a butterfly is just simply the combination of a call debit spread and a call credit spread. So a call debit spread would be a directional play where I buy, let's say, an 8,000 call, sell an 8,200. Okay, that's going to be a debit to my account. But being that we think this is 5 of 3, and we are going to probably get this wave 4 pullback, why not sell and take in a little premium above our upside intended resistance zone? So the way you can do that is why don't you sell another 82 call to be short 2 82 calls. Remember, you're long 1 at 8,000, short 2 at 8,200, and then to protect that extra one you're short, whatever that credit you take in by selling an extra 8,200 call, you can spend less of it and buy something higher like an 8,400 call. The sale of an additional 8,200 and purchase of the 8,400 will be a net credit to which you can apply to the 8,000 to 8,200 call debit spread. So the combination of a call, debit spread, and credit spread is your butterfly. And I'll kind of set one up here for you. A similar situation, not surprisingly, is in the bond market, where I think we're actually in a fourth wave downward correction, bearish correction here in the bond market. We had a trade on similar to that last week, I think, with our members. We covered the trade, made a little bit of profit before the B wave bounce. And the same thing could happen again. I think we might get a drop here in bonds. You saw dollar strength today. Gold was weak. And that certainly is an intramarket kind of macro confirmation of potentially lower bonds, higher rates. So So something you can do here is on the right scale, this is the 30-year bond futures. You can look over here and do it in the TLT if you like. You know, if you think we're going to move down into maybe the 130, 128 area here on TLT, which is around 153 to 151 in the 30-year bonds, you know, you could set this trade up, and let's just take you through the mechanics of this. So as we bring over the platform, let's go over to TLT. And, okay, what the heck is this? Oh, just a little, I forgot that I already have one of these trades on, just a little one lot. Okay, so, but anyways, let's go through again so we can get down to the 128 mark. Let's go around 129. That's going to be the center of that wave 4 fib support zone there. So if we went over and did a, let's go, you know, the other thing you got to look at is how long would this move last? I mean, you're probably going to get this over like the next week or two, not much more than that. Would it look weird for the C wave to be way out here in August? Yeah, it would. It really should happen in the next couple weeks. So let's go 2 to 3 weeks out. There's the 10 days. Let's go 17 days. Let's do these 9 AUG, these 17 days. We're going to be centered on the 129. Go on the put side, you right click, you buy a butterfly, and that's a little confusing because it will be a debit. So if you sell 2 at 129, let's go, let me look at the chart again. I don't care so much about delta. I like to trade the underlying market. So for short 2 around 129, we could do like a 131 on the top side, $2 above, $2 below. So now we have a 131 long 1, 129 short 2, and a 127 long 1, long 2, short 2, you're even, but the trade is going to cost 43 cents or $43. So if you analyze the trade, you go over here, and I got to take that, I think I have a little iron condor on here. We go like this. Let's put the butterfly on. This is your typical butterfly shape, right? The most you can lose is that debit, which is 43 cents or $43. If you get the pin heading into expiration on August 9th, you could potentially make $150. So you got 43 at risk to make 150. Pretty solid, right? Almost 1 part risk to 4 part reward. So that's a good way to put that on. And of course, if you size up, you do a 10 lot, you got $400 of risk. $430 of risk to make $1,500 if you get the pin, okay, and that's what you're looking for. So hopefully that helps, guys. That's just a little butterfly trade in bonds, and also a similar idea in the NASDAQ. Remember, we do have, we've got the Wednesday webinar tomorrow morning, so let's bring that back. If you go to youtube.com/Todd Gordon, which I'll bring that up here in one sec. Just go back over here. Okay, you should have the live stream right here. So Wednesday, special guest on January 24th with Dr. J, John Nigerian, my good friend over, has been doing CBC with him for a good 6, 8, 10 years now. Holy cow. So we'll have some fun. We'll talk about the options market, its history, obviously current markets, lots going on. We're doing an event together in October in Vegas. The Nigerians are doing a beautiful event with a nice speaker lineup that I got the nod to go speak for, so we'll be there. All right, guys, so be sure to be there, and we'll see you tomorrow morning on the webinar. Have a good one. Take care.